Welcome to the Deep Dive. Today, we're digging into something pretty interesting. What's the real state of blockchain gaming right now?
Yeah, we've got this Q1 2025 report, State of Blockchain Gaming.
Exactly. And our mission, really, is to unpack it, cut through the hype, and pull out the key insights for you, what's actually happening.
Think of it as getting the pulse of blockchain gaming, the trends, the shifts, what it all means.
Okay, let's jump straight to the big picture then. The report says 5.8 million daily unique active wallets in Q1.
That's the headline number, yeah. 5.8 million daily wallets.
Sounds massive, but there was a slight dip, wasn't there?
That's right, yeah. A 6% decrease from Q4. But, you have to put that in context.
Context being?
The wider Web3 ecosystem.
Yeah.
There was a general slowdown across the board, so it wasn't just gaming feeling. Not totally unexpected.
Right, okay, it's all connected. But something that stood out to me was the gap between gaming and DeFi shrinking. What's happening there?
That's fascinating, actually. Web3 seems to be, diversifying. Gaming was maybe the early leader in activity.
Yeah, seemed like it.
But now you're seeing AI applications, social dApps. They're gaining real momentum. It shows people are using Web3 for more than just like trading or playing.
So the ecosystem's maturing, branching out more.
Exactly, less siloed. Now, looking at the blockchains themselves, opBNB is still top for gaming activity, according to this.
Why do you think opBNB is holding that spot?
Well, it's probably a mix of things. Their tech, it allows for faster transactions, lower costs, right? Which is super important for games.
Makes sense. Smooth gameplay needs that.
Plus, some popular games got on there early, creating that sort of network effect. People go where the games are.
Yeah, fast and cheap, always a good combo. But the report also flags some rising contenders. Aptos, SKALE, say.
Definitely chains to keep an eye on. Each one has a slightly different approach, technically speaking.
How so?
Aptos boasts high throughput. SKALE uses a modular setup good for scaling individual dApps. And say is actually built more for trading, but that can benefit some game types too.
And it's not just the tech, it's the actual games using them. Like Stan on Aptos, Pixudi on SKALE.
Exactly. Hot Spring on Say too. These games are kind of the proof points.
Showing what the platforms can do.
Right. They might be trying new gameplay loops, new community stuff that works well on those specific chains. Their success helps validate the tech and pulls in more developers, more players. It shows innovation isn't just on the biggest chains.
Okay, let's zoom in a bit. Specific games mentioned. World of Dypians has a new roadmap. What's interesting there?
Yeah, World of Dypians looks like they're focusing on deeper engagement, quests, AI gameplay elements.
The AI integration.
And customizable NFT characters, those unique digital items. It all points to a richer, more personalized game, thinking long-term retention.
And Pixudi, they won that Super Dapp Showdown Season 1. That sounds like a big deal.
Oh, absolutely. Winning something like that gives a game a huge visibility boost, attracts players, maybe investors.
That ability too, I guess.
Definitely. Shows the competition heating up in the Web3 game space.
Then there's Age of Dino. They moved to BNB chain specifically for better scalability. Why is that so vital?
Scalability is just fundamental, isn't it?
Yeah.
Especially for games with lots of players interacting in real time.
Yeah, if the chain slows down.
The game lags, fees spike. It just breaks the experience.
Yeah.
So Age of Dino moving suggests they're planning for growth, trying to get ahead of potential bottlenecks.
Smart. Okay, another one. Pixels partnering with Mocaverse using Mocha ID. What's the significance of this unified identity stuff?
This is really important for like a connected metaverse. Mocha ID means smoother sign-ins, better interoperability.
So your identity, maybe even your assets, could work across different Mocaverse things.
Potentially, yeah. That's the goal. Makes it much more user-friendly, less fragmented.
And even with all these new things, the report mentions older NFT games like Guild of Guardians, Gods Unchained. They're still relevant.
Yeah, they're holding strong, especially in terms of demand for their NFTs and player interest.
What does that tell us?
It really underlines the appeal of true digital ownership in games. That core idea, owning your assets as NFTs, built strong communities, and that value is still a major draw for players. The original promise holds up.
Okay, let's shift gears slightly. The metaverse sector. The report notes a bit of a downturn. NFT trading volume down 28%, sales down 37% in Q1.
Yeah, those numbers suggest maybe the initial sort of speculative hype around virtual land and assets is cooling off a bit.
Correction, maybe.
Could be. Or maybe a shift towards, actual utility. What can you do in the metaverse beyond just owning a plot.
Interesting, because despite that trend, Mocaverse is highlighted as doing really well. Why are they bucking the trend?
Well, Mocaverse seems very focused on partnerships that bring actual utility in community, collaborating with the Anime Foundation, MyAnimalist, OneFootball.
Tapping into existing fan bases.
Exactly. Bringing relevant content, real experiences into their space, it feels more sustainable than just speculating on land prices.
And that TON Foundation collaboration, getting access to Telegram's users, that seems huge.
Absolutely. Using established platforms like Telegram is a key strategy for broader Web3 adoption. And targeting gamers and sports fans specifically. Smart move. Find the users where they already are.
Meanwhile, the sandbox is sticking to its branded experiences strategy.
Yeah, that seems to be their niche.
Yep.
Partnering with big, known brands to create these immersive experiences. It attracts fans of those brands, offers a different kind of engagement.
And then there's this emerging industrial metaverse idea. Siemens, Boeing using digital twins.
Right, digital replicas for simulation, training. This is really significant.
Moving beyond entertainment.
Totally. It
Yeah.
shows the practical, real-world applications.
Yeah.
Efficiency, cost savings, safety improvements. It proves the tech has value way beyond just games or social stuff.
Okay, let's talk money. Investments in Web3 gaming. Q1 saw a big drop in total funding, right?
Yeah, $91 million raised. Which sounds like a lot, but it's actually down 71% from Q4. That's a significant decrease.
Oof. Why the caution from investors?
Likely a mix of things. Broader economic climate, maybe a bit of a reassessment of the Web3 gaming space after that initial boom.
But here's the twist. The number of deals actually increased by 35%.
That's the fascinating part, isn't it? Fewer huge funding rounds, perhaps, but still a lot of activity.
So smaller checks spread across more projects.
Seems like it. Suggests investors are still deploying capital, but maybe focusing on earlier stages, diversifying bets, supporting innovation more broadly.
And the main focus for that money, infrastructure.
Makes perfect sense. You need that strong foundation, the tools, the tech.
For everything else to work properly.
Exactly. Investing in infrastructure is crucial for long-term growth. Without it, you can't scale, you can't get those high-quality experiences out to the masses.
The report names names too. MarbleX, Beamable, the game company. What are they building?
Okay, so MarbleX raised $20 million for their semi-publishing model. Probably aims to make it easier to launch blockchain games.
Lowering barrier.
Beamable got $13.5 million for decentralized game backends. That's crucial tech for developers. And the game company, $10 million to push cloud gaming, making blockchain games more accessible without needing fancy hardware.
So the investment theme is building the plumbing, supporting more leaner projects.
You could say that. Prioritizing the building blocks, more efficient models. It's about scaling smart, building lean, laying groundwork for sustainable growth.
All right, so let's wrap this up. Looking back at this Q1 2025 report, it feels like, well, a bit of a mixed bag, as you said.
Yeah, definitely.
Dips in activity, less total investment compared to Q4. But underneath that, lots of important building still happening. Adaptation with AI, focus on infrastructure.
That's a good way to put it. Despite some headline numbers being down, the report shows positive underlying stuff. Better infrastructure, new identity layers, AI experiments. These are all signs of a maturing industry, laying the groundwork.
Vital for the long run. And if you, listening, want to keep track of this stuff in real time.
Gaming narrative pages is the place, right? They have the live data.
Exactly. For the kind of up-to-the-minute info we've been diving into today, check them out.
And looking forward, well, the story's definitely not over. These trends we talked about, Web3 sectors converging, the focus on solid foundations, new tech, it really suggests the next phase of gaming could be pretty transformative.
Yeah, offering experiences we might not even be fully imagining yet. Lots to watch.
Sure.
Okay, thanks for joining us for this deep dive today.